Whoop, whoop. We're getting some yeses. All right, perfect. Let me start the recording. And happy Saturday, y'all. Trade Thirsty. This is our final speaker for today, Steve Federell. Been working with him for a while, and this is his first time here, so we're excited to have him. Steve, you have the mic for 1 hour.
Well, thank you, and good morning, all. Happy Earth Day today on Saturday, coming to you guys from sunny North San Diego. And just want to make sure, can you see the first page of my PowerPoint as well? Is that pretty clear? How's it looking so far? Can you guys see the screen okay, Jeanette?
Yes, Steve, I've got a full screenshot over here with your first page of your PowerPoint, and I see your mouse moving around. It's all good to go.
Okay, so good morning again. I want to thank the folks at TradeThirsty. This is my first inaugural event. I typically do not do many webinars, but I have been exceptionally impressed with the TradeThirsty group and their level of professionalism. So they have convinced me to offer a smaller, more condensed, not only webinar, but special course offering at the end of this that we'll go through. But let me just get to the next slide here real quick. Let's make the attorneys happy. Important notice, essentially the trading of futures involves substantial risk of loss, and this particular webinar, along with all of the webinars I've been asked to do by different organizations across the country and brokerage firms, are for educational purposes only. So for those that do not know who I am, my name is Steve Federell. I'm the founder and managing partner of FXCStrader.com. I also am the founder and the portfolio manager of Benchmark Wealth Advisors. That is our sister RIA company. It is an investment advisory firm. Without boring with lots of details about my bio, essentially took a job with Fidelity Investments way back in '96 once I got out of college. Yes, I went to school at Xavier University, finance degree. '95 was the graduation. Yes, I am quite bummed that we lost the Elite Eight game, but let's face it, Gonzaga was fantastic. But going into my resume, just very simply, have a lot of experience in the finance field, was an analyst, was a trader, is still a trader of futures, and now I'm a portfolio manager for clients as well. But really the key thing to why it's relevant to this discussion today is when I was in the process of joining Ken Fisher's firm, big investment advisory firm out of California, I had an opportunity to, before I left Fidelity, move to a senior trading position, and I had an opportunity also to trade inside a lot of executive and portfolio managers' accounts, because we had to execute trades for them, and was really just shocked to see that the buy and hold thing that is very much in the media about, asset managers was not the case with a lot of the portfolio managers. So I decided at that point I was going to teach myself how to trade, and this was probably the spring of 2000. Had an opportunity to really understand and be mentored along with a lot of very smart traders from Goldman Sachs in New York, and decided to actively leave and form my own firm in 2006 along with my partner to learn to trade futures and the equity markets for clients. So I've been doing this for over 10 years. I have been fortunate, and quite frankly, about 4 years ago, I really got sick of listening to people ask me, can you help me learn how to trade? So I formed FXCStrader.com. And the firm essentially is a mentoring for trading the futures markets, primarily the CME traded instruments, ES, 6E, certainly oil, GC, and some of the Eurex indexes like the DAX, so forth. So what I'm going to present to you guys today is two, in my opinion, of the most important technical analysis skills, and one of them is understanding auction market theory, essentially the broader big picture, if you will, of the market via the market profile chart. And secondarily is the order flow, which at its most detailed or most minute execution, what I like to often refer to as the fine tuner, of when to execute the trade. So just a little bit, married, 2 kids. It's actually a picture of San Clemente, a big Thanksgiving that we do every year, fun times. So let's go ahead and get into this a little bit about fairly large following on social media. You can follow me on Twitter, so forth if you wish. I've done a lot of webinars for different organizations across the country. Okay, let's get into this, and then I'll go into a little webinar agenda next. But the important thing, as many of you have probably seen, that 95% of the traders are going about the business trading the futures market specifically incorrectly and will never be profitable. And I have seen this well over 100 students over the last few years. I don't like talking a lot about this, but I want everybody to understand that this statistic should absolutely be ingrained in your brain. But on a positive note, it should be a motivator to really understand not how to have somebody fish for you, but to teach yourself to fish, because you can, if you learn it correctly, you can feed yourself for life. And I feel very strongly about that. Most of my webinars, they are very direct, and they get to the point of learn this. We can certainly help you cut the learning curve, but spend the time to learn how to trade properly with the right tools. There's lots of tools out there. I'm teaching essentially just very generically 2 of those tools today, but our students are taught to, outside of learning complete technical analysis, understand what's going on in the market. So we don't want any of our students to be that 95%. We don't want anybody attending this webinar. There is a very large attendance today. We'd love to have you all be that 5% or higher. So please, if you have the opportunity to, watch the rest of this webinar, because I'm going to go through a lot of stuff that is critically important to understanding. So I often get the question, why would I want to learn this type of analysis, Steve? Why do I need to learn order flow? Why do I need to learn auction market theory? And without just coming up with the type of analysis and how it fits into other type of analysis, let's just talk about some of the biggest people out there that have the largest followings on social media. You probably recognize many of these individuals here. Every single person on this list utilizes market profile and order flow in some form or the other, whether it's utilizing some of the Ninja plugins like Jigsaw or the Linsoft's IRT product that I use with the Delta Print plugin, which I'll show you today. I think it's important to understand that if some of the largest professional traders out there utilize both of these types of analyses, one a very broad market analysis, auction market theory, and the other a very minute analysis, and that is order flow at its most intricate, and we'll go into how to read all that just generically today. I think it's important to know that. So let's go ahead and get into the agenda. This is the overview. So essentially, what are market profile and Delta Print charts? Delta Print is the same term as the footprint, okay? It's just Linsoft's, or IRT is their software. It is the plugin for reading order flow. Whereas the market profile, which was essentially invented by Peter Stettlemyer in the early 80s along with the Chicago Board of Trade. So what is market profile? Why it's important to understand how it tracks order flow, which is really everything. You'll often hear me refer to having an edge. A statistical edge is important to understanding what markets can do in terms of patterns, but having the right type of technical analysis and being able to utilize it, especially the 2 tools we're going to talk about today, can definitely give you the edge in trading. So chart examples, we'll go through some Delta Print charts, essentially understanding the when to trade versus the where. And keep in mind, the where to trade is a much easier thing to determine than the when. So, you know, there's support and resistance levels, there's Fibonacci, there's price action, there's obviously candles, different types of candle patterns. There's all kinds of mathematical analysis that show areas of what's called confluence or certain levels in the market, whether it be a high or low volume node, that is not as difficult to determine as the actual when to trade. Okay, so yesterday and the day before is a great example. We had the markets just lifting up, and this is the S&P 500 ES contract, just lifting up into an area that was an excellent opportunity to short, but absolutely just completely blew through the area. And a lot of traders were caught on the short side as the market continued to lift, and a lot of the other time frame and larger players that come into the market. So if I have the opportunity to today, and I can open up the software and maybe take a look at that if we've got the time. I want to try and keep this to essentially the next 45 minutes. So the bonus today is we have a volume imbalance indicator that's built into the delta print chart. I'm going to talk a little bit about that. And essentially the goal, really, while observing the delta print or the order flow, is determine whether trading activity is drying up, being facilitated, or increasing in pace at one form of price extreme or the other. Essentially helping you understand, is other time frame or is big money players active inside the market? Okay. And then towards the end, I'll go through the 7 steps to consistent profitability. But keep in mind as you go through this, these 2 technical analysis concepts, they require some study. You can learn them. It is not difficult to just understand generically how they work, which I'll go through today. But I would highly encourage, if you genuinely want to take and get into a deep understanding of how good these 2 tools can be, and how the folks that have mastered the use of these tools along with other types of technical analysis, many of these individuals that I know, they're pulling wheelbarrows of money out of the market. And really, that's the bottom line. I hope that's the reason most people are on the webinar today, is to learn the importance of teaching yourself how to fish. So with that being said, let's get into the next slide. It's just a market profile overview. This was developed in the early 80s by CBOT and Peter Stottlemyre. Many of you may have heard of Jim Dalton. I studied a lot of Jim in the very early days of 2000. Jim is the one that really brought Peter's work to light, written a number of books, actually both excellent books, still relevant today. Markets in Profile is one book, and Market Profile. 1997 was the last, I think, copyright. I don't have the book in front of me, but the key components of Market Profile, essentially the understanding broadly of auction market theory, are time, price, and volume, which are then combined and displayed in a statistical distribution, much like a normal bell curve, to reveal pricing patterns and value. So the structure for organizing a developed market, essentially auction market theory, it is also a horizontal and vertical display of the dynamic process of market activity, and it's a visual display of the market's current value or fair price range. Now, the value area highs and lows may be a common term that many of you have already heard, and we'll talk about that today. So this is a decision support tool. Helps traders better understand the present condition of the market. A tool for recording the market's current activity through the organization of time, price, and volume. And it's a graphic reflection of all market participants' opinions in the aggregate. So the market's auction process translates supply and demand factors into current price, okay? So just like if you went to an auction and let's say there was 16 of the same paintings for sale, and they had, maybe different times of when they were painted in terms of age. It's a representation on a bell curve of how that looks. So I'll get into that. But the market's price is determined through the market's own price discovery. It's essentially a bid and offer auction process. So the market auctions up until there are no more buyers and down until there are no more sellers. And understanding this dual auction in the up and down is what's most important, the relationship between the movements, okay? So we talked a little bit about it, but just in terms of bullet points, the components are direction, which way the market's moving, okay? is the market testing down lower and then turning around, or I should say testing lower and getting a rejection like we saw a couple days late this week where we tested lower and we had a quick rejection and then we had a rip up, okay? So that's what's called a open test drive type of opening, which in both cases led to a trend day up. Understanding that early would have kept you off of the shorts and hopefully more than likely, especially some of our students, looking to trade the pullbacks on that trend up. Obviously, we didn't get too many opportunities on the pullbacks, and they were very light before they ripped again. But the early indications that other time frame players or larger money came into the market was the type of understanding that can keep you out of the way of at least taking shots at shorts this week. Understanding that. But the initial bounce, which is the first hour here, by the way, I'm not a big fan of these webinars at drawing and doing all the different stuff, so I'll just use my pointer to point to it. But essentially points of control, whether it be volume or time, POC, VPOC, range extension. So essentially the market moving beyond the first hour's initial balance, either up or down. Tails and single prints, which can leave really good hints as to the presence of other time frame players. Trading ranges, okay, and understanding the correlation between a high and a low and how many days or periods of time we may have been in that balance area versus breaking out into a trend area, and whether volume is present at that point. So you guys may have seen this. I think this is probably one of the best pictures you can keep in mind. We're going to be disseminating a recording of this webinar. So even though you may have sort of get this now, it takes some time to sink in. I would encourage you to rewatch this presentation. I have a number of variants of this presentation up on my YouTube channel as well. But essentially, scenario one, okay, you have a high and a low of value area that represents 70% of the trading volume and time inside of the value high and low areas. So when the market opens above the value area and is unable to hold the value area high on subsequent tests, it's a strong bullish signal. And we saw this earlier this week. So in scenario two, when a market opens above value, but then again begins to trade for two consecutive brackets, remember brackets a half an hour each, back inside the value area, there's a strong tendency to rotate all the way through the value area and test the value area low. We keep in mind in all five of these scenarios, there's a number of statistics that go along. There's about 20 different stats that can be calculated, both NinjaTrader and I think, if I'm not mistaken, TradeStation. But the easiest way to look at the stats that are related to these types of five scenarios is using Linsoft software, because it has a lot of back testing that can be done to prove this. We have the answers to a lot of these different types of homework assignments in these five scenarios as far as what statistically significant are the percentages do these show up. That's the kind of stuff, by the way, that really can give you an edge. So for some of you that are followers of FT71, Murad Askar is probably one of the best educators out there. He owns Stage 5, which is an introducing broker to gain capital, which is OEC. The statistical percentages of these showing up in any given week, groups of days, month, or a longer time frame can really help you understand what are the chances of us staying within value, bouncing around inside the balance of value, or breaking out of that to a different area. And the open type, or understanding the market's opening, can really give you a heads up as to whether or not other time frame players are present, as they were Thursday and Friday of this week. Certainly to the upside on Thursday, much more so than any day last week. But also understanding that the movement of inside the value area and how that correlates to potential balance, or number of days balancing, I should say, versus trend days, which are less common. Okay. Now, volatility, as presented in the previous webinar, as measured by the VIX and a couple of other indicators, is historically low right now. And a lot of the large hedge fund dudes in New York, primarily Paul Tudor Jones, some of the other firms out there like Omega Advisors, are looking for volatility to pick up. So it very much bodes for understanding the movements of price versus volume in time, which is presented via the market profile. So just again, scenario 3, market opens below, but then begins to trade again 2 consecutive brackets back inside the value area. And then there's usually a strong tendency to rotate all the way up to the value area high. Whereas in scenario 4, essentially the market opens below the value area, and then it is able to hold below previous day's low, weekly low, okay? Even though it may bounce around. If the market begins to trade within the value area and volume picks up, it would be recommended to exit short positions. So again, not necessary to memorize all these different scenarios, but just hopefully this is showing you the power of understanding the auctioning process. So when the market in scenario 5 opens within the value area, it's showing signs of a balanced market, okay? It's what you call a neutral day, of the number of different day types that market profile will teach us. So trading within that. So if we could determine, at least with a reasonable accuracy, that we're going to be bouncing around within the value area, especially if it's a larger range value area, that we may have the ability to just short the tops and buy the bottoms over a period of time to be determined. So this is Linsoft's market profile chart, and there's a lot of information on here. And you may not be able to see that, and that's fine. So essentially, I could just explain this to you real quick. This is, each day represents the movements. If I was to split this out, each of these profiles starts with D bracket, by the way, at 9:30 to 10:30 Eastern time is when what they call RTH, or regular trading hours, part of the market opens up. The E bracket here prints next. For the next, each bracket is a half an hour. So as these begin to form, and you can see this picture was taken halfway through this day, but if we look at the previous day, E bracket opens up, auctions down, and again, kind of hard to see, but each bracket represents a different color. If we move to the previous day, you can see again where D bracket opens up, we auction down, and this is a great example of an open test drive to a trend day. And we got a little bit of a hint here. We held not necessarily the previous day's point of controls. The point of control from the volume is the brown line. Essentially the high, or the largest aggregate, is the brown line. Whereas from a time perspective, the red line is the aggregate of the most time spent trading. So these are important levels, the brown and the red lines, along with the entire profile and how it builds out itself. I think you can call this color magenta, sort of a pinkish. It just shows the volume building up behind it. Now, this can be expanded out so it's easier to see, and I do a lot of that. But the important thing really is to understand that there's brackets. Each half an hour is a bracket. It builds all the way out for just the regular pit hours or the regular trading hours session. The value area high and low, I have colored maybe differently than some others, but the brown area is the volume-based value area high and low. So the high here, essentially right at 2387, and then the low down here, which also happens to be the point of control from a time perspective, that day right here at 2370.50. So again, apologize if you guys can't quite see that, but just understanding generically the concept here is what's most important, okay? So that essentially is a market profile chart, and you can see how we have what they call naked POCs. It's represented by the brown line up here again for volume, and then the NPOC for the time-based. These are also important areas where markets can stop and reverse or stop and trade at. These can be, especially if they come with a lot of volume and these two lines are close together and they represent maybe more than just one day, like in this particular case, if it's a big, big level, like 2220 to the 30 area was. Every bounce down below that, which we saw earlier this week, was met, especially since they were an area of high and low volume nodes, met with a considerable amount of buying that completely reversed the market off of that level. So again, looking at the ES, this is the S&P 500 E-mini contract traded on the CME. One thing I probably should note also is if you trade utilizing any type of volume or time-based analysis, this works the best on a centrally traded product. Okay, so this doesn't work as good on forex in my opinion, because it is a fragmented market, whereas a particular contract like the ES or the NQ or certainly CL, which is oils traded on the NYMEX, this works much better as an analysis tool on the most liquid of these contracts, the DAX on Eurex as an example, even the Euro stocks, which is much more liquid than the DAX, a lot higher volume, the volume very similar to the ES's volume, which is over 1 million contracts a day on average. So anything that's a liquid product, this type of analysis works the best on. And at least because a lot of people say, well, why trade futures versus other instruments? And there's a whole variety of reasons. I'm not going to get, really into the leverage part, which can certainly be good or bad. That type of leverage obviously does exist inside the forex market. But I like futures because this type of analysis, it's hard to game or play with the trader. In forex, a lot of the international banks can play with you, and you really don't have an edge, in my opinion, especially since you can't see a centralized volume. Whereas looking at the any type of liquid product that's traded on the CME, this is the best type of analysis to overlay on it. And this is probably one of the largest reasons that most educators that are worth their weight in salt will recommend to a new student that's trading retail to start learning with the ES first. Okay, it is by far, in my opinion, as a mentor and a coach, the best place to start to learn. Now, you can certainly take these types of analysis and move it over into oil, a little more volatile. It does require a lot more understanding of the statistics that go along with these types of days. Okay, as you can see, this was a trend day right here with the red arrows. But most of these days were just some variation of a normal day. Okay, neutral days are days that essentially open up in the previous day's initial balance and spend the whole day there. So you can see on this previous more concentrated type of profile, we have a high essentially at 2365, looks like, and we have a low at 2350, 450, and it's a fairly tight range. But if the next day opened up and we traded right inside that type of range, is a neutral day. If the value area highs and lows were at the high and low or darn near of the day, that may be an opportunity to trade the balances of both the movements to the up, going to short side, essentially looking for the market to rotate back down again, because it doesn't look like in this particular day, in many of these days, that we're sort of balancing, that a lot of the other time frame or the larger money was present. Whereas many days this week, especially looking at Thursday, where the algorithms and a lot of the other time frame players were just going up and barbecuing the shorts all day. So I think this type of analysis, once it's learned, there's a bazillion nuances that go with understanding all these patterns and how they correlate to each other. But that comes from time. We try and teach a lot of that. And I'm pretty confident we can get most of those patterns to our students in a fairly short period of time. But you really need to understand these movements, and they can help you tremendously. Some of the best market profile experts out there in terms of traders that use these to trade different types of contracts in the futures markets. Some of these guys are so good that they can just use this chart and trade off it, period. They don't need to see order flow, price action, candlestick patterns, which you can kind of see here really anyway. If you break these out, you're able to essentially split these out. I'm not in the live software, it's just a PowerPoint slider. I'd show you how to split them out, but just right click, essentially split them out. And then it's just like looking at a 30-minute candle chart. So a lot of information can be gleaned from this, and I think it's important to recognize, which is really my only goal in this webinar, is to try and hopefully have everyone recognize the importance of it. Not as much maybe the total understanding of it, but how useful it can be in understanding the broad picture, or essentially the large macro of what's going on in the market. Everything that I've just talked about in the previous slides and here, this is all what's called understanding context. And it's a word that's thrown around a lot in auction market theory, but essentially it just means what's going on in the market. Who's in charge? Is it retail? Is it the larger players? And if they are in charge, by how much? What's the power of these movements? And this picture, along with other types of profiles, you can look at weekly profiles and monthly, where essentially all these days are condensed together. You can split them out. But however you're looking at the analysis, generally this, along with a long-term composite, which is just a daily candle chart with all the volume overlaid on it, these will tell you more about context, in my opinion, than any other type of analysis out there that exists, period. So a lot of times when I do the reviews of the previous 5 days with some of the students and our members, we look back and we replay essentially the last 5 days. You have the ability inside Linsoft to replay the software, and we look to see what took place, what patterns developed based on previous patterns. What can we glean from the last 3 days or the last 2 days of what the market did? Does that mean that we have the potential, or are we going to see any sort of edge statistically of us breaking out? Typically, if a market is balancing within 3 or 4 days, as an example, you will usually have some sort of movement away from that balance to try and test either higher or lower. What's the power that comes along with that test? These are all important questions to be asking yourself as you're prepping for the trading week or the trading day. So just a different profile, okay? There are many different profile types. I've talked a lot about day types, trend days, neutral variation days. Understanding the pattern types, though, which is what this slide is showing, is also very powerful. This is an example of the 27th of March, where we had a trend day up with a P-shaped profile, okay, and a single formed. Now, a single can be an area, in this particular single, if I'm not mistaken, was at also a low volume node, and essentially we had an open, see the opening movement here, the market open where that, kind of hard to see again, apologize, but in D bracket at 9:30, market opened up right at 2320. Opening is always shown by a blue 0 in the bracket. Market moved down. This was an opening test, and then we drove up the rest of the day. And certain places, in some cases, not this day, but you'll see 2 or 3 singles formed on what may be called a double distribution or a triple distribution trend day up. You can also have the exact same pattern on the way down. Okay? So again, not as important that you can recognize these patterns right off the bat. Just again, showing you some different examples of the power of this type of analysis. So with a P-shaped and in some cases a B-shaped profile, ideally what you want to see is some sort of drive down and then movement up. Spend some time balancing, as we did, forming the top of the P-shaped profile, and then ideally going up and 1 or 2 taking the top, which is essentially printing 1 or 2 prints above it, and then having a complete sell-off down to the bottom. Typically, this can be certainly a great area to take another long. and maybe bounce back up again, which happened, essentially a couple times during this day, or in my opinion, probably one of the best trades I've ever had. And this P-shaped, usually present itself a few times a quarter, or a B-shaped profile, and having us get past and break through, in many cases, the single that's formed and run all the way back down the zipper. So let me just jump back this slide. I'm going to show one other point. Notice also in this particular case, obviously, on this day, we had some international news. There was, obviously, we're dealing with a lot of problems in Syria and the Middle East and North Korea. So there was some news that led to essentially these movements, and then the movement back up. But again, just another picture. But notice the market spent its time once we got back. Essentially, other time players came in to buy this, shot us back up into the previous ranges. Very easy to see why we spent some time balancing back in this area, because it was inside of, in the previous examples, the market's movements of the lows. So what you're seeing here as far as different types of profiles, this is a day types chart. Again, this is, by the way, all these charts, these aren't that difficult to build. Our students get the definitions for these, come right off of the cloud. They go with our full course to just plug right into LensSoft and use. But I think it's important to understand the power of the markets. And each day, this is 2017 for Chunk, you can see how we had a lot of trend days moving in as the market was continuing what a lot of people are referring to as the Trump trade, the movement up on potentially better regulations, taxes, all that fun stuff. And then we spent some time balancing once that movement took place. Notice we had a big gap up into 24, again, mostly on a lot of tax news and so forth. And then we had a lot of trend days in down. So it's good to be able to look back and say, okay, well, there was this many trend days and the market was neutral, just understanding the relationships between the three neutral days, if you will, which is rare. Notice this right here. These were all three neutral days versus the following trend days. And typically after you have a long or a large trend day, you usually have some neutral or some normal variation days that follow. It'll oftentimes test the value area highs and lows of that big trend. A lot about is envision for the movements. So, in the interest of time here, 12:40 approximately East Coast time. Let me get into the order flow and the So the order flow analysis is really the missing link for traders. It is the missing link for many of our students that come to us with stories like I have mastered reading candle charts and reading order flow, reading, I should say, price action, but I don't understand how to read order flow. I have an idea how the auctioning process works in terms of understanding the big macro picture, context of what's going on. I can see the correlations between the different candles, the different patterns or chart types. I understand the Fibonacci relations of those. I mean, there's all kinds of analysis, but it boils down to where do I execute the trade? And order flow really is the type of tool that can help you feel much more confident about that. There's always going to be certain levels of ambiguity associated with trading, and an individual trader's emotions and their ability to deal with higher, low levels of ambiguity in trading, essentially not really knowing, not seeing a bell ringing at the top or bottom, is hopefully for many of you that learn this can be a good comfort factor in executing the trade. So order flow very simply refers to how the orders are coming into the market, how they're being filled, whether they're executing at the offer or on the bid. So it's a dual action at the most micro level. So order flow in real time can tell a trader how trade is being facilitated in any direction, a key concept in auction market theory, right? So order flow patterns is revealed by the delta print or the footprint chart or the jigsaw or order book. We're going to be looking at the delta print here. They're not traditional price patterns. They're time and sales patterns. So a traditional time and sales window data just simply moves too fast to comprehend. So even if you have filters and you're filtering out a lot of the one contracts that execute, you really can't glean anything from that stuff just ripping past it. Then, oh, well, hey, there's a big order to buy, or somebody lifted the offer there for 1,000 cars. Whereas the introduction, which was back, I think, in 2000, if I'm not mistaken, of looking inside the candle to see what actually executed at the most aggressive level, can help with understanding that. So the delta print and some of the others I mentioned, they diverge radically from traditional price patterns because they're not indicator based. So there's no attempt to over or under simplify them. So the footprint is, or the delta print, it's not a red light, green light system. It's said it just is hints as to what the traders are doing at the institutional level, if you're looking at larger orders executing and or the aggregate of. So understanding how to comprehend it, but the support and resistance analysis, trend lines, and a lot of the other macro, as I've talked about before, are the where to trade, essentially what zones, if you will, whereas the footprint, or looking inside the candle to the order flow, is showing the when. So the benefits of a bid-ask delta print, okay, track order flow, multiple chart types. So you can switch it from 5 minutes to 5 range to a 6 PNF, which is a point and figure, reversal, which is typically what a lot of readers of order flow in these types of charts will use as a setting. Because it'll show the movements and get rid of a lot of the noise, filter it out, essentially give you a little more transparency. But again, executing with greater precision, gaining confidence, right? At least the amount of confidence it's going to take to execute the trade and getting rid of the noise, okay? Transparency. These are all benefits. These are huge benefits. They will give you a good edge if you learn how to read them benefits. So delta print chart contains all price and volume data that logically organizes so you can see inside the chart. Okay? So you can uncover price and volume patterns others will never see how the buy and sell orders are impacting price, gauge the tendency the market will continue in a direction, have an intraday bar view of price and volume data at the most intimate level, have better, more complete information. This is due to inside the bar information, or what I like to call the aggressive trade. Okay, the types of order flow that should be analyzed, in my opinion, really should only be the aggressive trade, what executes. Notice I haven't in any of this discussion mentioned all of the orders that are placed on the screen. So if you're looking at a traditional price ladder, or what they call DOME, Dynamic Order Management system, I prefer to use the TT platform from Trading Technologies to execute, but some people use Ninja or TradeStation or whatever your DOME is, Market Delta. They all essentially do the same thing. They show you the orders on the right and left and the aggregate volume if you have that indicator turned on of what's executing. That can give you, as long as you know how to read it well, it can give you a lot of insight into that. Okay, so let's take a quick look at just dissecting down order flow. So this, by the way, the red and the blue, this is the imbalance algorithm that I talked about. This is inherent or built into both the Market Delta Footprint product as well as the Delta Print plugin, which is an RTX extension for Linsoft's IRT software. So the relationship of heavy sell side imbalances like you see here at the top versus a buy side imbalance can give you hints to a potential reversal. Doesn't mean, again, this is a ring the bell, short or get long type signal, but the amount of these signals, the frequency of these signals, and most importantly, the size of this signal at an important area of where to trade can be the when. So if you just imagine where all these X's are, just draw a line down here, okay? Let's break these two sides into two different sides, okay? So on the left-hand side, you have the aggressive trade or the volume that's accumulating for the sellers, okay? Essentially all the offers. Whereas on the right-hand side, you have the buyers or the bid. You're always comparing in a diagonal fashion the orders that execute on the right-hand side to the lower left-hand side in a diagonal pattern, okay? Because you're either offering or lifting the offers, or you have buyers that are hitting the bid. Okay, so and one thing to keep in mind as we're looking forward to these examples or any videos of mine, you may have seen it, don't get caught up in a lot of the minutia of what's going on inside each bracket, because there's going to be a ton of numbers inside these bars you'll see in later examples. And it's not as important to get caught up with all what's going on inside all of that. What is important is just understanding the nuances of what shows up at these high and low levels at big confluence areas of the market, right? Like a 2300 on the ES, or recently a 2320 through 30 is big levels. You came into those dips earlier this week and saw really large buy-side imbalances hitting in multiple fashion as these candles started to build out towards the bottom. That was your first hint that there was some pretty strong buying coming in, and had a quick rejection off of those lows to rip us back up to the range that we've been bouncing in for quite some time. So and also, which I'm going to show you in examples of live pictures taken from my software, but you really just want to compare the strong bid volume to a weak buyer, which is usually noted with the algo in blue, and then just flip that upside down. The strong volume on the bid side, or the buyers on the right-hand side, with the weak volume that's on the left, or the sellers. I want to see, which isn't shown in this example here, but I want to see a 5-to-1 or higher relationship in order for it to carry any weight with me. That's a little different than the software shows. Most of the software is a 4-to-1 relationship is the minimum of size. And in many cases, I much prefer, as I teach my students, to look for a 10-to-1 or higher. And I'll show you a number of examples going forward. But looking at the Delta Print Imbalance Indicator. So this is a picture. This was a little while ago. Obviously, you can tell by the price on the ES, but this is just a beautiful teaching example, so I show this quite a lot. But essentially coming into here, we had a pretty large rally. Yes, it was what they call a century mark in ES, so you're typically going to have some resistance up against this area, especially since this is one of the first times at this point that we hit this area. Well, we came into this area, and you see the over 10-to-1 buy side versus sell side imbalance, both going off with very little volume above the 1700 mark. That was your first indication, along with some pretty heavy volume hitting just under 1700, that there was going to be a reversal. It wasn't necessarily a bell ringing at the top, but These numbers were really small, not much order flow going off, and they were both capping the tops of both of these bars with sells. So no order flow going off at the top, two, and then a big flush. And notice with the flush came some pretty significant volume. So one other thing that, and it's really not a buy side or sell side imbalance indicator, but you always want to note, which I'll show you in other pictures going forward, you always want to note where all the volume executes in each bar. I now have them highlighted by a yellow bracket. So essentially it's just the volume point of control for each bar that prints. And notice these are really just candles, right? But we're looking inside the candles. Here's two green candles and then two red. So if you want to just think about it in terms of it's a candle chart, but you're looking in the side to see what executes at the most aggressive trade, which is the orders that execute, not the stuff that flashes on the dome, which is not worth paying attention to, in my opinion, because there's a lot of spoofing going on. There's a lot of flash orders that don't execute that are all generated by algorithms just looking to fool us. So if you had a tendency in the past to get caught up with a lot of that, you won't with this type of analysis. It won't be as much of a concern for you. So we've noted that there was a lot of volume that went off just under 1699. Okay, and the market moved down about 8 points. We had up at the top of this particular bracket, notice there's no zero by something or something by zero. This is 215 by 1017 if you can't read it. This is what's called an imbalance, meaning that, not a guarantee, but there's a hint that the market may decide to auction back up against that point again because the market in this particular bar did not finish its auction. So as we came back up against that, look at the huge sell-side imbalance that formed right there. So in real-life example, what took place is we shorted 1698. Actually got kind of a rotten fill on this trade, but whatever. I only went in half size because I certainly would have added as we got back up against 1700. So notice with the stop losses that seem to be one of the largest discussions out there in futures trading from a risk management standpoint, notice how you felt confident, you've read this correctly, you felt confident that if you're taking a short, essentially this actually wound up being a trend day, much lower than what you see, but the market had a pullback. It's what's called a slingshot. These are fantastic trades to take, especially early on in a trend. They have a very, very high win rate if you can recognize them. But looking at coming back up against this level again, all the volume that executed through here, we could see. Notice you wouldn't be able to see that unless you had some sort of volume overlay or underlay on this chart. But looking at the actual orders gives you even more confidence coming up against to take a short. But notice you know where your stop level is right here as well. So if you get above 1700, maybe 1701, 01 and a half, certainly could even set a 2-point stop in this type of trade beyond 1700 at 1702. You know when you're wrong. And it's very easy to see from an order flow perspective where you're wrong. This actually wound up being a phenomenal trade. It was over 20 points at the of most of our runners. So here's the delta print. And this is not how my charts look, but again, you can't see these numbers, but I thought this was a good example. So the first two arrows, they display an unfinished auction, okay? Notice there's no zeros in either of these boxes indicating potentially a completed auction. And we came back up against it again. Let me jump back here again. Came back up against that area again. This is on a different type of contract. But we came up against it again. We printed a completed auction. Got below the volume and then had a sell-off. Okay. Now, I've shown a lot of examples of shorts. You can flip these charts upside down and get the same type of example of longs. Go into the next chart here real quick. This is just a reversal leg up pattern. So today's lift-off short squeeze. Notice you had a lot of volume hit, had a lot of buy-side imbalances rip us up into an area, but again, this is just a picture coming into that 1700 from an earlier or a pre-view from the previous chart. Look how we had a lot of 10 to 1s all the way up, but the power and and almost what's called a skip print of a lot of this gave us a signal from an order flow perspective that, hey, maybe we want to wait for the extreme out, getting back to a 1700 before we take a short, maybe be more of a better idea taking a long. And as we came back down into a big volume area that had been built, nothing went off in the order flow. 3 10-to-1s in a row. And this probably would have been a quick scalp trade to 1700 on just a slight pullback long. This has also showed itself on Thursday, a lot of this type of pattern from a pretty good rip, especially past a lot of singles we had from previous days that just the other time frame players blew us through on Thursday. So it's just an example of the reversal. This is what the chart looks like currently, okay? Nothing's changed. Colors have. It's been split out. Notice the volume has been yellow bracketed with a background color. But really we're looking for hints of movements into big areas. And this is the all-time high in the ES. I wanted to show you what this example looked like where we had not quite a 4-to-1, a 3-to-1, but then we had a huge over 20-to-1 imbalance hit towards the 01 level, and we haven't seen that level since. So we've been in a pullback there. So, these examples can just go galore. I don't want to bore you guys with this coming up against. Everybody's got stuff to do here on this Saturday. So let me just move into the 7 key elements to consistent profitability. I can tell you number 2 and number 7 are probably the most important, because if you do not have a positive view, I like to call it the Tony Robbins. Tony's probably one of the most positive guys on this entire planet. You want to be, not negative. So you have to constantly be reprogramming your subconscious. If you're familiar with neurolinguistic programming, it's just basically doing exercises to get your subconscious programmed for a success and not failure. So, but really finding the right mentor is going to save you a lot of headaches. I was fortunate enough to hook up with a couple of guys from Goldman Sachs, so I was quite lucky in that case. They taught me this in an early day in 2005. But, I've also spent close to 10,000 hours in front of screens trading it since in the 10 years that I've been trading the futures markets, primarily the ES and the DAX. It's just a lot of time that goes into it. We can help you cut the learning curve down, but it still requires screen time. So with that, we're going to go ahead and this is the first time, you guys, that I've offered a mini course. We have the full course for clients, which is soup to nuts, up on our website for $800. But I've decided, since the TradeThirsty folks are master at what they suggest in marketers, I have decided to cut the course down. And I have an introductory offer. This course that you're getting for $200 is probably worth a couple grand. But I'm breaking it down into 2 video modules. Essentially, the first one is market profile, and the next video, it's about 5 hours in total, is the order flow. And there's also 4 PDFs that go along with it, as far as an ebook to accompany the videos. I've just redone a lot of this for the AMS Delta print, so it'll teach you about understanding, auction market theory and Delta print. And keep in mind, I have no connection or any vested interest in Linsoft or Investor RT. I don't even get the software to discount. I do have a relationship with Dr. Lin. They are very good at what they do. As you may have heard, market profile, I should say market delta, they've moved away from the Linsoft platform, and market delta has moved to CQG. So you've seen a lot of the custom indicators, as ourself and many of the individuals you saw in that second slide that are big traders have moved back to Linsoft because a lot of the custom indicators that many of them have spent years building, like they would not have worked pulling over CQG, which is quite sad for market delta. So that's why if you're confused, is the difference between the delta print, which is a plug-in indicator that is built by AMS Trading out of the Netherlands. So you'll learn to read order flow. It's really just a mini course. So it's a straightforward path to consistent profitability. I'm going to leave this slide up. Let's go ahead and take some questions if we can, please. By the way, I got a couple of questions coming in from email. And the question I get the most is, what kind of time it takes to become a profitable trader. And that is a very difficult question to answer. It really depends on one's dedication to the craft, your study of the different technical analysis tools, your use of them, your time spent trading in sim. Can anybody become a profitable trader that puts the time into it? I feel they can. I just think that the problem is that most traders, which I genuinely hope you guys will not take this mindset, is they want somebody to fish for them. This is why trading rooms are popular. I used to have a trading room. I no longer have a trading room. A lot of that conflicts with the benchmark wealth advisor side of the business, and that's a FINRA thing, and I just choose not to have a trading room because all of the folks that came in for trials, the vast majority of them just wanted us to fish for them, and that'll never work. I have seen time and time again where traders that don't put the time in can actually be told where to trade, both a buy and sell, and they'll still wind up losing money because they don't understand risk management. So I'll leave you with that that question. So the other question I get the most is that the development of the daily or the homework, which we'll talk a lot about in different webinars, is critical to, along with all the screen time and trading in sim and so forth, is critical to being able to envision these patterns developing. So this is why I'll always do a review of the past 5 days with our members. We'll go through a replay, see exactly what took place, what trades should have been taken, whether you did or not, because it really helps in the envisioning process of being able to build a couple of hypotheticals for each day. And that's why you see some of the best educators, at least as far as using the tools I'm talking about, especially someone like FT71, is they'll go through and they'll run a daily video of building out a couple of hypothetical examples of what you think the market can do in any given day. That is so powerful, and not only understanding where you can be, but it cuts down on that level of ambiguity associated with taking the trade. And as once an individual trader hopefully masters order flow, you have the when to trade as well. So Jeanette, that's pretty much it. And if anybody's got any questions, feel free to type them up. Should I be looking at a particular question window?
Can you see the Can you see their questions? The question box.
The last one I see is the audience question.
Okay. You should see if you hit your questions tab and it pops out. Or have you not seen any of theirs? I can go and just start reading them to you.
I'm going to pop the tab out and move it to the other screen here. Bear with me.
Yeah, they've been asking a lot of questions.
Okay, let me just minimize this.
You're going to have to scroll back. So I would go back into like around 11:16 a.m. Go to George at 11:16 a.m. That's where I see the real questions starting to pop in. Right. And we'll do like maybe a 10-minute Q&A here for you because there's a lot.
Well, I mean, I don't have anywhere to go. I already missed my son's soccer game. So,
oh, crap. Okay.
Not a big deal. Not a big deal. So.
All right, you see them now? So you see what I'm saying? Start 11:16?
Yeah, there we go. Okay.
All right, cool.
Wow, this is the entire day's questions. Okay. There's a ton in here.
Can you scroll all the way down to the bottom and then just work your way back up? That's easiest.
11:16 a.m. I see Giorgio at 11:19 a.m.
Okay, I was looking at 11:16 while market profile using TPO is based at a.
Oh, so it's broken out by my webinar? Okay.
Maybe. I don't know. I'm just saying that 11:16 or 12:16. No, 11:16. 11:16 a.m. Is that right? Yeah, 11:16 a.m. is probably around the time Central where your questions started coming in. Make sense?
Yeah, I see it. I'm just expanding out the window so it's easier to read them.
And so one of the lacking features in this software.
Yeah, and the recording, guys, will be up in the next 48 hours. I don't know if you guys are going to break it out in 4 different segments for this.
We did. We break it out by your picture, your offer link, and your
Hey, good. Looks like there's a guy who used to work at Fidelity. Good to hear. Having trouble seeing the phone, imagine. Well, market profile using TPOs is based on a time-based windows in which the market may not be active most of the time. Do you think volume profile based on the actual market movements is more appropriate to capture the market? You know, to be honest with you, I think they carry the same weight, but the volume-based aggregate is more important than the time, if that answers the question. Yes, the value area is the value area from the day before. You can also look at value areas on a weekly perspective, essentially 5 days mashed together, or an entire month. We look at all of those, in addition to the value areas of the last 5 days. Do you consider order flow analysis in addition to market profile analysis? Yes. Hopefully I've answered that. Again, they both carry weight, but the most important weight is volume. The volume in the aggregate, at least of the products that I'm talking about trading. If you're trading other types of stuff or much less volume, especially anything that has to do with soybeans, meats, corn, any of that stuff, this works exceptionally well, Rob, on the ZB. Absolutely. The YM, a little bit to a lesser degree, in my opinion. There are probably some that disagree with me on that, just because the volume's not there. Yeah, TradeStation, correct on that. What do you see 10-1 here? It's really just a comparison of where the red and the blue show up. So if I go back to, and again, this is one of those things where if you look at the 162 versus the 2021, this is a 10-1 imbalance at the top. We can reverse that for other flow. Looks like there's a couple of people. Yes, there's a 6-tick reversal reg. That runs in tandem with the 5-tick. I use a 5 and a 6 PNF reversal. Okay, the vast majority of the educators out there, whether it's Anthony Drager or myself, we use a point and figure. And some of the other folks I showed their larger Twitter following guys at the beginning, they use the same thing. The reason is a point and figure. Along with like a Renko type concept, it just filters out a lot of the noise. So if the market essentially can move 5 ticks in one direction, but it can't get a reversal and move the other way, that's telling you a lot about that particular movement. The same thing can be said for 6. All right, so I've just answered that one, explain what 0 by 130 means. It's really just there's no order flow going off at the 0, which is the sell side, and there's 130 contracts that went off as buyers on the bid side or the right-hand side. What is a completed? It's a completed auction. A completed auction essentially is just that. It's a 0 by something or a something by 0. That meaning that not necessarily the market's going to stop there and reverse down, right, as you would want to see if you're short, or the reverse of that if you're long, but it's telling you that at least at that particular bar, you had a completed auction. Yeah, sorry about that. I'll put the course back up there. So next question. You guys are asking some great questions, by the way. This is good stuff. Yeah, it's just the imbalance algo. This is not a unique concept, you guys. It's just that Niles in the Netherlands at AMS, and Chad Payne, he's one of the developers of Linsoft. He's a very great guy. They've been able to put together an algorithm that will show you what these imbalances are. Again, this is not a ring in the bell, top or bottom, short, long signal, but it is a hint of potentially something. And that's the key, is understanding the different types of correlations in that as far as a hint. So I'm fairly familiar with market profile, volume profile, and delta, but you certainly have a nuance. These are great questions, and again, this all gets back to understanding correlations and understanding patterns. That comes with time, and we can help you cut that down, and that's why I wanted to offer our mini course. I really have never offered a mini course before, because, right, wrong, or indifferent, most marketing people would tell me it's wrong. I think all students should go through our complete course, soup to nuts, okay? As you can see, a lot of firms out there that offer super complete courses are multi-thousands of dollars. I only charge $800 for the course, and it's 40 hours of instructional video in HD and 63 files. So it's a mass amount of information, but I really want a student that decides to go down that path to put the dedication in it. Don't just sit around and watch 40 hours or 6 hours of Steve's voice until you're sick of hearing it, and not learn anything from him. Really put the time into understanding it. All right, next question. Does Delta Print work on TradeStation? I don't know the answer to that, Rob. I know there's a number of people that have put it into play, and I do get that with the TradeStation and the TOS folks, Thinkorswim. I know you guys love those platforms. Many of them are pretty attached to it. If you think about it, a lot of those people out there that have those platforms, especially some of the bigger names I've talked about, they also run IRT as well. Add another few screens and run IRT. So I don't know, even if I had the largest budget out there for research and trading as when I did run a fund, a long-short fund, I always will have it. So regardless of whether I move, and this is a big reason that I don't, because Ninja Trader keeps coming to me, wants you to be an educational partner, and I became one for a while, and I just don't like the Ninja platform, guys. I mean, I know Peter Davies' a Jigsaw. I think the plugin's good, but it's nowhere near the comprehensive look that the Delta Print offers, or the footprint, okay? And Delta Print right now is just a plugin for Linsoft. It's totally worth it. As I tell a lot of people, if you can afford it, please do not trip on nickels on the way to dollars with your trading systems. Get a good computer. Have multiple screens. Make sure you got, a Ethernet-based speed coming in. And make sure you're running, an i5 or higher quad or a 6-core like I have. Make sure you have a mindset to get into this and a place to work quietly when you're trading and or learning. Quincy, if you can send me an email on that, there's a long answer to that. I'm happy to answer that question via email. If I study and learn to use your courses, you intended to study from buying breakouts. I tell you, John, you learn what I'm talking about. You put the time in. You're not going to be faked out by these breakouts that fail, okay, period. How many down negative days do you have per year in your trading? I'm probably 1 or 2 days a week, and that's because I take a lot of risk in trading my own personal accounts, or the trust account with myself and my wife. I do not trade that way in family accounts or client accounts. But my long-term win rate's about 71%. Do you supply the software as part of? No. Linsoft.com is where you get IRT's product. Do you trade every day? No, I rarely trade on Fridays. Thanks for offering a good deal. I've been struggling with the answer trading videos and videos developer. Somehow aware of these principles. You're welcome, James. Does this work for stocks and option trades? No, it does not work for options. Yes, it can work for equities as long as they are liquid, Renee. Does your system use uptick, downtick, or bid-ask data. No, but I can tell you, John, that's some really important stuff. I use an NYSE tick chart on a 3-minute interval, and I've probably shown this in multiple videos in the past. I've got a pile of videos up on my YouTube channel, which, by the way, we re-upped our channel this week, folks. So we're putting some more fresher content on there. As a neophyte has never traded futures, is this program only beneficial for short? No, not at all. This absolutely can be used to swing trade the spiders or the Qs, or something that is equal to. But I really just don't think you should do all your trading in the equities markets. I think that eventually, if you become a good enough trader, you should trade the futures markets as well. I trade both. I don't trade ETFs, though. Occasionally I'll trade bonds. I'm fairly familiar to market profile. Volume profile, you certainly have it. All right, something I already answered that one. Let me just go. How long will it take to be proficient in your program? Dan, the answer to the proficient in the program is really going to be on your dedication. My most successful student, Andrew, was in Philadelphia, where I'm originally from. He's actually a good friend of mine. Taught him how to trade about 7 years ago. Guy pulls about routinely $20,000 to $30,000 out of the market every month. He trades a few hours a day. But he also put close to 16 hours a day into this, 5 days a week for close to 2 years. I mean, the kid just absolutely dove in. Great role model. Occasionally you'll see me talking to him on Twitter. But if a student decides to go with our full course, we can cut that learning time down. Do I still think you need to be a few thousand hours of screen time to really get proficient at that? Depends on the person's intellect, depends on their ability, their decision making, and there's so many variable factors out there. But our most successful student went from sim trading to professionally trading, and then to consistent profitability in about 5 months. No other fees are included. No, one-time fee for the 197. So after the course, what is the price? So after you go through either the big course we offer or my new Edge course here, what I really would like everybody to do is join me weekly in a 1-hour review of the last 5 days, where we go back, watch the profile, and so forth. If you purchase my 197 course, it's going to offer you the opportunity to become one of the members of our monthly program as well. We think we charge a $7 introductory, and then typically it's $67 a month to be a part of our members, where I go through once a week. And we do it via GoToWebinar. Sometimes I'll use Cisco WebEx. But the key thing is, we want to get everybody together, review what the last 5 days and what the different developments were in the market. Most importantly, I can tell you guys this, and this is a selfish statement. Ever since I've been doing this over the last 3 years, that I've sort of forced myself in some sort of forum to go through a review of the market, my win rate long term has gone up 4 percentage points. So I've actually seen a benefit out of this for the trading that I do for both myself and clients. Yeah, again, that toss thing, no, can't be used there. I don't know. I don't know if the course is enough to learn to trade futures. It depends on how much you have learned before coming into taking it. I usually recommend doing the full course, but this is a good intro way. If you guys decide to do the 197 course and you want to upgrade, we'll credit you the $200. You guys send me an email on that. Do you use TT because of the plug? I got to tell you, the Trading Technologies guys, they are the owner of the static dome patent that brings them a lot of revenue from other firms. Their dome, which used to be called the expensive one, used to be called X-Trader Pro. It was really cost prohibitive to using, but they've come out with a platform, especially if you trade through brokers like AMP or some of the other guys that TT's hooked up with, and there's a whole list. I trade with AMP. But the TT platform's 50 cents a side, which seems costly, I know, but that's a lot better than $700 a month to trade the X-Trader platform the best. But it is the best. Can the Delta Printing K be purchased? Yes, it's a one-time purchase. Not with my offer, though. You have to go to AMS Trading directly and get it. So the software is Linsoft. Timothy, are you using a market by order from the CME? I think TT distribute. Yes, I am, Rob. after the abbreviated course is in credit for the full course. Guess it's all on demand. Yes, the full course is all the 63 files and 40 HD hours is all up on our Microsoft OneDrive private cloud. So you'd be granted access to the cloud. Once you go with the mini course, once we receive payment, you'll automatically be brought into the area where you can view the 2 videos and view and or download the 4 PDFs of the ebooks associated with it. If you Google me, just type in Stephen Vetterl in Google. I'm all over the place, guys. Full course price is $799.